Whenever Dawson and I have a platform to present the company, we want to tell you something different than what you get from a general corporate slide deck. So for this year's AGM, we're not going to talk about the Donkin Mine. We're not going to do a deep dive in coal markets, and we're not going to show you how we run our balance sheet. We've covered those topics off in previous presentations, and we're always happy to chat about those topics if you want to give us a call. But in a time of turbulent markets, we thought it would be helpful, beneficial to our shareholders to share with you a bit of the research on how Morien trades in the stock market, because aside from all the wonderful things that we attempt to do with the corporation, for most shareholders, it's simply a function of buy low, sell high, or hopefully not buy high, sell low. So with that, I'm going to turn the meeting over to Dawson, our President and CEO, and he's going to run through a slide deck with you that talks a lot about market phenomena and not so much about us and our assets. So over to you, Dawson.
Thank you, John, and thank you to all the Morien shareholders and investors who are tuning in today. As the title of the presentation would imply, we do think Morien is truly a unique, a differently managed company, and it's something that is rare, certainly in the capital market, a single event stock, as we've called it here. And we're all here because we're playing the event that Donkin goes back into production. While we have no visibility on clients' timing with Donkin, in the coming pages I hope to show you how Morien might trade should that event go our way. The first chart shows Morien's share price and its total daily trading volume since April 1st of 2020, or since Donkin was idled. There have been 3 external events that have strongly influenced our trading activity during this period. The first event was the global energy crisis that commenced in Q3 last year, and which was caused by a global surge in post-pandemic energy demand. Put simply, we just didn't have enough fossil fuel supply or renewable scale-up to meet that surge in energy growth that came from all that COVID stimulus money, and as a result, this caused a surge in oil and coal prices and extremely high natural gas prices, which actually spiked close to 400% in Europe. Following that, Russia's invasion of Ukraine in February led to the EU sanctioning all Russian coal imports in April. This comes into effect in August, and this just made an already tight coal market even tighter. The data set for this chart ends in May, but if it extended out to the last week, I would have added another event: Russia sanctions EU. Last week, Putin sanctioned several companies with connections in Europe, including subsidiaries of his own Gazprom, which not surprisingly saw energy prices take another significant jump upward. And obviously, if the EU does indeed go forward with its intended ban on Russian oil in the next couple of days, we'll have a 5th event to add to this chart as well. Following the third quarter energy crisis, Morien saw a large influx of U.S.-based liquidity, separated out here in red bars on this chart. Given the large number of publicly traded coal companies domiciled in the States, it's not surprising that some of that investor pool has found its way into Morien. From Q3 onward, our average daily trading volume has increased 3 times versus our pre-pandemic volumes. I think we can also credit some of this U.S. origin liquidity to a U.S.-based newsletter publisher named National Inflation Association. We didn't engage this group. They found Morien all on their own, like a few other coal equities they were promoting leading into the energy crisis. You can see the date of each report they wrote on Morien in this chart here. They launched coverage in May of last year, and not surprisingly, it really picked up on the front end of the Q3 energy crisis. I want to move off Morien just for a moment and look at the broader market. Here, we're looking at the performance of select asset classes indexed to 100 starting at the beginning of the year. Even before Russia's invasion of Ukraine, commodities and energy indices had already started to outperform all other assets. As you can see here, with the bright green representing the S&P 500's energy sector index and the red line representing the S&P commodity index. And 5 months into 2022, and commodities, energy, and now agriculture, here in blue, have surged by double digits, while nearly every other asset class, from real estate to gold to small caps, have struggled to hold their value. In order to better understand the commodity sector's outperformance, I've gathered year-to-date data in this chart for a series of mining and energy-based exchange-traded funds. As you can see, coal in blue and natural gas in red have far exceeded the performance of every other mining-based ETF. There were several options for each ETF to choose from, except for coal. There is no ETF for coal. Van Eck had one for 12 years, but in a moment of miscalculation, they closed the fund in December of 2020. So we went and created our own coal composite for comparison purposes for today's presentation. It consists of 10 prominent global coal producers, seen here on this chart. The list is bookmarked at the top by Thungela Resources. That's Anglo-American South African coal spin-off, which has seen a 3 times growth in its share price since its IPO last June. Generally speaking, the spread in performance is just a function of total production volumes or degree of export versus domestic markets and the degree of contracted pricing versus spot market pricing, which is all to say those making the most profit are at the top. The stunning ascent of these coal stocks is the product of that post-pandemic energy crisis that I spoke about earlier, a crisis that's been turbocharged by Russia's war on Ukraine, and that's resulted in the EU sanctioning Russian coal, and with many other nations like South Korea and Japan now threatening to do the same. Here's how Morien has performed versus that coal company composite. Like the other charts, it's indexed to 100 starting at January of this year. Both have an upward movement to the right, suggesting we're tracking the same external factors as other coal equities are. But the key difference is that the blue line represents producing assets, whereas the black line, being Morien's asset, is not producing. This is what we at Morien call the care and maintenance discount. If this is how Morien is performing in an idled state, just think about how it might trade if Donkina actually goes back into production. This chart shows you the price history of U.S. origin semi-soft steel or met coal in gold, as well as European delivered thermal coal in blue. I've plotted the data from April 2020 just to give you a sense of the change in pricing since Donkin was placed on care and maintenance. Beginning at the onset of the energy crisis in Q3 last year, these two coal indices have surged, growing 4 times in the case of steel coal and 7 times for thermal coal. Like most things, there is a complicated explanation for how this surge in pricing happened, and we could talk about it for half an hour, but the short answer is that Q3 energy crisis just stressed an already tight market, and that was dramatically intensified by those Russian coal sanctions, which represents about 15% of the seaborne thermal market and about 16% of the seaborne steel coal market. And those sanctions were just bolstered by sky-high natural gas prices stemming from low supply. Many analysts believe that these coal prices will be maintained at elevated levels, owing to the core belief that demand just isn't going away anytime soon, coupled with the fact that not many new coal mines are coming online to meet this demand. And this naturally creates an environment where coal prices are well supported moving forward. Here we're looking at Morien's 1-year share price performance in black, indexed against steel coal and thermal coal. Steel coal is below thermal because it hasn't experienced the gains that thermal has. But as you can see, Morien's share price is responding to moves in both coal types. Now, Donkin is primarily a steel coal, but for investors wanting to coordinate our stock to an index, pricing data for thermal coal is much more available and visible. Thermal coal is more spot market driven, whereas steel coal is generally contract based, which gives rise to much more volatility in the price of thermal coal. Thermal coal also has competition with other energy sources, which makes its consumption a little less predictable, hence its price volatility versus steel coal, which largely has no competition. Thermal coal also receives much broader press coverage, which our shareholders are likely responding to. But perhaps the most important factor to understanding thermal coal demand and pricing is the price of natural gas. Here I've indexed thermal coal against the Dutch TTF price, which is the primary gas pricing hub for the European gas market. We've plotted it over a period of time spanning back to when Donkin was idled, just to give you a sense of how low natural gas prices were at that point in time. Fuel switching at that point favored gas over coal. If you're not familiar, many utilities use fuel switching to temporarily replace one generation fuel source with another. The ability to switch fuels is beneficial for a generator because it simply allows them to use a less expensive fuel and reduce their operating costs. And lowering electricity rates is of high concern for places like the EU right now. As of last week, Germans, for example, were paying over 40 cents per kilowatt hour versus 15 cents here in Nova Scotia. So as you can see in this chart, European wholesale gas prices have soared, and this has encouraged more utilities to switch from gas to thermal coal to generate electricity. The EU's pending sanctions on Russian oil imports will stress European natural gas prices even further, so I suspect we will see this coal-gas spread widen even more in the coming months. And we see coal demand remaining strong. These two coal charts show coal demand over the last 30 years. Once again, steel coal is in gold and thermal coal is in blue. For steel coal, demand rose by 0.5% in 2021, a significantly improved market compared to the negative 3% drop that it experienced in 2020 during the heart of the pandemic. And for thermal coal on the right, electricity demand is outpacing low carbon or renewable energy supply. And with the steeply rising nat gas prices that you just saw, thermal coal demand has soared, growing 9% in 2021, hitting the highest level of thermal coal demand on record. Demand for both coal types is forecast to continue growing for at least the next couple of years. Now, the IEA, or the International Energy Agency, which is one of the world's primary sources of energy-related data and forecasts based in Paris, they issued their annual coal report in December, which these charts are based on. The agency, however, now plans to issue a mid-year revision in July, its first time ever to do so, to analyze the impact of the war. In all likelihood, demand for both coal types will be higher than the December report predicted, given that the war has set off a chain reaction, perhaps an actual structural change in the global energy market that has thrusted coal firmly into the spotlight. While we await a potential decision on Donkin, we at Morien will continue to reduce our overhead costs, which, as you can see from the chart on the left, are down 50% since 2015 and 17% since Donkin was idled. We've also been active with our share buyback program, buying back 3.5% of our shares since the mine was idled, and a total of 16% since 2015 when we first initiated the normal course issuer bid. And as you can see from the chart on the right, we have also witnessed a tightening of our shareholder registry over this period. Morien had about 2,200 shareholders in 2015. We've seen that number shrink to about 500 today. I suspect this is a trend many fossil fuel companies are experiencing, as fossil fuel assets are increasingly slotted into a niche market, albeit one that is well supported by a relatively small investor pool, which recognizes the buying opportunity that this sector offers. So how do you sum up Morien? Put simply, we have a high-value royalty on a mine that was producing, is now idled, and finds itself in one of the strongest coal bull markets in history. And we know from several conversations with our shareholders that our business model of returning cash to shareholders, either through share buybacks or through the reinstatement of our dividend policy, is a model that resonates very well with them. Lastly, where many companies would have a long list of upcoming catalysts on their final slide, Morien has one event, one decision. The only event that we're waiting for is a positive development decision at Donkin, which we believe will remove that care and maintenance discount, allowing Morien to unlock the gains that other coal equities are experiencing, and we believe will continue to experience as we navigate a prolonged fundamental change in the energy landscape that is increasingly reliant on coal. I would like to close today's presentation by thanking our shareholders for all of their support since Donkin was idled. As many of you know, John Bedreski and I are always available to receive phone calls from investors. My cell phone is listed here, as it is in every press release that we issue. Should any of you want to discuss Donkin or what Morien is doing on the ground here in Nova Scotia in terms of advocacy, please don't hesitate to call us. And with that, I'll now open it up for questions.
Thank you. As a reminder, if you are a registered shareholder and would like to ask a question, please press *1 on your telephone keypad. There are currently no questions in the queue. I'd like to hand the call back over to you for any closing comments.
Thank you, Daryl. So this concludes our meeting. Ladies and gentlemen, on behalf of our board of directors, Morien's executive team, thank you for attending our annual meeting today.
Thank you for joining us today. This does conclude today's teleconference. You may disconnect your lines at this time. Have a great day.